Dan Pickering joins me now. He is the Chief Investment Officer of Pickering Energy Partners. Any event risk, Dan, either, maybe not today, but in the months to come around this hearing?
I don't think so, Kelly. There's a lot of political theater going on. The Democrats were bashing the industry. The Republicans were bashing Biden. The industry's highlighting that they want to and are willing to spend money. So I doubt that there's any meaningful impact out of these hearings other than a lot of good social media content for everybody involved.
Crude is back below $100 a barrel today, WTI, on this IEA release, which itself doesn't do much to put a dent in global oil supplies, but oil is trading as if it does. What are your thoughts on that?
Well, the SPR release certainly brings more crude into the near-term supply picture. What it does, though, is it likely pushes that tightness out into the out years. So the SPR releases are having the desired effect. They're bringing down oil prices. That should bring down gasoline prices. But the ultimate refill of those SPR reserves is going to create demand in the future. So I think we've pushed the problem out, not necessarily addressed it permanently.
So it's almost like you trade the near-term bearishness for a structurally more bullish case. That said, energy has, since we saw it spike to, what was it, almost 130 in the 120s range, we've definitely seen the oil price settle back down here. Should we expect it to now stay more in this range?
Well, I think that we're now adjusting to the fact that we may cancel a number of these Russian barrels. The Ukraine conflict does not seem to be escalating beyond where it was. And so the answer is that 130 upside move, unless the economy accelerates dramatically, pushing demand up higher, or there's some physical supply disruption event, then we're probably in this, I think about the next 5 years at 80 plus, and the next couple years is going to be, 90 to 110. I don't think it's a $150 or $200 environment.
Sure, and anyone who got in at the very highs, it probably has to grapple with that. But in the meantime, there are a lot of strategic ways you say people can play the energy space right now. What would some of those be?
Sure, and I think the issue is, as it relates to crude, is it doesn't need to be 150 or 130. These companies make a lot of money at $100 a barrel or 90 or 80. And so we like the oilfield services space on the view that there will be more drilling activity. Schlumberger is the name we like there. The Permian producers, low cost, ability to grow production over time, Diamondback Energy, Devon Energy as well. So we like those names. Gas probably hasn't had enough respect over the last year. It's starting to get respect now. EQT is a way to play that on the producing side. Yeah,
natural gas is going to be the talk of the decade, I feel. Whether we're banning nat gas hookups or relying on it as a bridge fuel or everything in between. Dan, we'll leave it there. Thanks for your time today. We appreciate it.